Good morning, everyone. My name is Timothy Lee, and I'm a mining analyst here at Red Cloud Securities. We would like to thank Pear Tree for sponsoring this session. We welcome Mark Selby, President and CEO of Canada Nickel Company. He will speak to us about the company's flagship Crawford Nickel project and its portfolio of prospects in the Timmins, Ontario area. Mark, you have 15 minutes, and then we'll have a 5-minute Q&A at the end of the session. And attendees, please feel free to ask questions using the Q&A link. Take it away, Mark.
Thanks, Timothy. Again, the investment thesis here is very clear. Nickel is about to go through one of its super cycles where it goes through every 15 to 20 years. In 2021, we saw 15% nickel demand growth. That's 3 to 5x. What you see in the other commodities. In terms of supply, global supply outside of China and Chinese controlled parts of Indonesia has actually been shrinking year in, year out for nearly 6 years. And so rest of world nickel consumers are faced with an increasingly difficult challenge of a whole new source of demand from nickel consumers for the EV market and what is now a shrinking supply. The unfortunate news with Russia and Ukraine is complicated and even complicated nickel supply chain story for those consumers. As Russia provides about 1/4 of the world's nickel that's not produced in China and Indonesia. With that backdrop, we are rapidly advancing our Crawford Nickel project. It was just we started with hole 5 in September 2019. We completed a PEA in the spring of last year with over $1 billion NPV and mid-teens IRR. We're on track to deliver a feasibility study by the end of the year, and we will be launching our permitting here shortly in the first quarter to be able to be in a place to look to start constructing this operation in the middle part of this decade. One thing that I would really like to emphasize, Crawford is the largest sulfide discovery since the early 1970s. We made an announcement at the end of November that we consolidated a district scale package, completing 18 deals to get 13 targets, 10 of which have a larger geophysical footprint than Crawford. These types of deposits, the geophysics is extremely helpful in terms of targeting the resource. And we put together a combined geophysical footprint that's 40 times larger than what we have at Crawford. We believe within that land package, there's another 6 Crawfords lurking, and we're going to step around and basically develop a key source of what we think is going to become one of the world's great nickel districts. And again, these types of deposits are able to be potentially zero carbon because we're in an area with low carbon electricity from the grid, and they're hosted in rock that has this great property that they spontaneously absorb CO2 when exposed to air. So, we think we are going to be one of the leading suppliers of low carbon nickel to the EV market and the existing stainless steel markets globally. Again, in terms of demand, I just want to underscore, how, people are underestimating the strength of nickel demand growth. At the start of 2021, every commodity analyst had nickel in a 3 to 5% surplus. We ended up with nickel in nearly a 6% deficit, which is the largest deficit on record. Demand growth, again, 15% plus year over year. That was driven by more than 100% demand growth from the EV sector and double-digit growth from stainless. We think we are now on the steep part of a S-curve technology adoption that you see across a range of technologies. And the thing that people always fail to grasp is when you're on those kinds of this steep part of the S-curve, you can see demand growth of 30, 50, 80, 100% for several years. And we think that's where we are today with the EV market. Later this year, we're going to start to see production of the large trucks and SUVs from the North American market enter the EV market for the first time. And all of those cars are going to have a lot of nickel in the battery sitting underneath them. In terms of Crawford, you could not ask for a better location to develop a large open pit mine mill operation. We're just north of Timmins. We have all of the large infrastructure in place. We're an hour drive from approximately 80,000 people, so we can have a local workforce Within 200 kilometers of Timmins, you've got 4 of the 6 largest gold and base metal operations that have been permitted. And we've from day one been focused on building a strong base of community and First Nation support, and we're very happy with our progress on that front. In terms of the PEA, again, this is the same sort of large-scale open pit mine mill operation that you'd see at any small to mid-size low-grade copper operation. We're just applying the same scale to a low-grade nickel deposit. The PEA results we're quite happy with, in defining one of the largest scale nickel deposits in the world, and be one of the largest nickel producers globally. And you can see the various metrics that are there. One thing I want to emphasize, we did the PEA relatively early. For a lot of juniors, the PEA is the best number that you're going to see, but we have substantial upsides that I'll go through in a few slides. That we think the feasibility study, when it gets completed by year end, you're going to see a substantial increase in that overall project value. In terms of what the majors are looking for, and again, if you look at development projects and how they trade, those projects that have the potential to be acquired by a major, tend to outperform other smaller projects. And again, we tick all of the boxes that the majors are looking for. We're in the first quartile of the cash cost curve. We're in the lowest decile of the carbon curve, which is going to be an increasing focus for most of the major mining companies. That number that you see there, that 2.8 tons per ton of nickel, does not include the benefit of our waste rock and tailings that to capture carbon, and we believe with that we'll get to a place where we're not only zero, but have carbon credits available for sale. In terms of where we would sit if we were fully ramped up today, we would be the 5th largest nickel sulfide operation globally, and we would be the largest base metal operation in Canada. So again, the kind of scale that the majors, who now with the kind of corporate activity, and that number of you probably saw BHP and Wyloo bidding for Noront, you're going to see increasing corporate activity in this space, because the very short list of nickel assets has got even shorter in the last 24 months. In terms of the upsides that you're going to see that get baked into the feasibility study going forward, first off is in terms of the resource base. We cut the resource off for the PEA at hole 65. Today we're at over hole 200, and so we're targeting a 50 to 100% increase in the resource that's utilized in the mine plan. We're looking anywhere from 50 to 100% increase, which is 1.3 to 1.8 billion tons versus the 900 million tons that was in the resource base, and that'll be out of a larger resource base that we expect to exceed over 2 billion tons. In terms of recovery, again, we had done less than a year's worth of metallurgy work on the project. We're targeting a 4 to 5 percentage point improvement. Each one of those percentage points of improvement is worth $90 million of NPV. You will have seen a series of news releases over the last several months from us as we continue to make some tweaks and improvements for the flow sheet that we'll end up using in the feasibility study. And we've been able to achieve anywhere from a 6 to 16% improvement in recovery. So some substantial upside on that front. We continue to work on quantifying on a larger and larger scale, and we'll do that through the course of the year in terms of the carbon capture potential of our tailings to underpin what we believe will be a zero carbon operation going forward. In our PEA, we assumed everything was sold into the stainless steel market. For our feasibility study, we expect half our nickel to go down into the EV chain and half the nickel continue to be utilized by the stainless steel industry. All of the cobalt PGMs in the concentrate that go into the EV market will become payable. And again, we continue to work with the local First Nations in terms of some pretty innovative financing opportunities to be able to improve the cash flow profile of some of the major capital acquisitions that we need to do. To emphasize just a few pieces where we're really working on improvements. And again, last week's release, we are very, very happy with. We took a very low grade sample, 0.19% nickel, and we were able to achieve 63% recovery from that sample, and we produced a 46% nickel sulfide concentrate, which we believe is the highest grade concentrate that's ever been produced in a lock cycle test. Again, there's going to be a range of recoveries across the deposit, but with these kinds of improvements that you can see there from 6 to 16% versus what we achieved in the PEA, we're quite confident that we'll achieve that 4 to 5 point target that we have, and look to exceed that by another several points. Again, each one of those points, worth $90 million US of NPV. The other key area of focus is around carbon capture. So we started with small column tests. To be able to get to a net zero point, we need to capture 4.5 kilos of CO2 per ton of tailings. We were able to, in just over 3 months, get close to that target, and in the top few centimeters of that column get to 17 kilos. We believe we'll be able to achieve a target of somewhere in the range of 8 to 10 kilos, which will allow us to be net zero and have carbon credits for sale. Just to emphasize just how spontaneous this process is, and again, in a world that is looking for ways to minimize carbon, to capture carbon, the fact that we're going to be mining billions of tons of rock that have this fantastic property that when they're exposed to air, they spontaneously absorb CO2. That piece of core that you see in the top part of the photo on the right is what the core looks like when it comes out of the ground. It's dark black to dark green. The piece of core that you see in the bottom would have looked just like that when it came out in a year earlier. But that white mineral that you see coating that rock is a mineral called magnesite. It's a magnesium carbonate mineral, and how it got there, that black piece of core basically would reach out, grab a CO2 molecule, and spontaneously convert itself into this mineral called magnesite. So, our tailings and waste rock, will be an opportunity to generate, a whole series of CO2 capture, which again, we think is going to be a very, very valuable property, of which today in that PEA, there's zero value for any of this carbon capture upside. Crawford, on its own is the largest sulfide discovery since the early 70s. This chart was from a Valley presentation in 2015. Again, as I said at the beginning, one thing we are very, very excited about, and that I don't think most investors realize, is that the land package that we've put together with the geophysical footprint that we've assembled, with the historical drilling that's clearly outlined some very large serpentinized dunite bodies that are the type of rock that host this mineralization. We think we are unlocking an entire nickel district that is going to have a half a dozen Crawfords and be among the largest nickel resources ever discovered. We have 37 square kilometers of ultramafic magnetic highs, which are the type of mineralization and the geophysical footprint that we're looking for, that were super helpful in terms of delineating the resource with Crawford. That's 40 times the footprint that we've had on our main zone, which in total had about 2 million tons of contained nickel. Again, what was helpful in identifying these targets is we're able to go back in the Ontario Geological Database and look at historical drilling done in the 50s, 60s, 80s, and 90s, a lot of which they didn't do any assays, because unless there was a long interval of very shiny sulfides, they wouldn't do the assays. But today, with the kind of scale that we're looking at mining these deposits, they're exactly the kind of nickel that the world needs. 10 of the targets that we acquired have a larger footprint than what we have. And again, we're very fortunate that they're all close to the existing infrastructure within the Timmins camp. Again, to confirm our targeting, there's a company called Asta Minerals. They have a target just north of us in Sothman that we approached them last April. They said thanks, but no thanks, and they've hit what looks like another Crawford. And again, confirms that our targeting approach is 100% spot on. In terms of some of the historical work that was done, you can see here, if we release those today, that's exactly the kind of mineralization that we're looking for, and again was done historically in the past, and it allows us to target our drilling going forward. And then we've got some very, very large targets, much larger than what we have at Crawford, that have been relatively untested but have the right geophysical signature to be a potential nickel deposit. Again, people might think, this is too much arm waving at this point, but I'd like to highlight, a very key geological fact. To make nickel deposits, you need an opening in the Earth's crust to allow material from the mantle to come to surface. Those tend not to be always very small things, and again, there's a bunch of one-off deposits. But if you look around the world, there's literally a half a dozen regions that dominate supply and dominate the global resource base. there's been a few times where a massive amount of value has been created, and those have generally been when someone has a new approach for a new source of demand that's emerging to an existing resource. That's what Inco did in the early 1900s, taking some deposits in Sudbury that were discovered 20 years earlier, and people couldn't figure out how to separate the nickel from the copper, and Inco figured out how to do that just in time for World War I. In the early part of this century, Tsingshan was a small regional stainless steel producer in central China. They realized that ferronickel production was a stupid way to make nickel, that if you're going to go that far, you should go one step further and make stainless steel, and even better, put that stainless steel plant on top of a nickel laterite deposit. They are now the world's largest nickel producer by a factor of 2x. They're the world's largest stainless steel producer. And all of that production and all of that stainless steel and the massive amount of value they created was basically from a set of nickel deposits that were drilled off in Eastern Sulawesi by Inco back in the late 60s and early 70s that were, quote, too low grade, and they're not the right chemistry to make ferronickel at that point in time. We think these large, low-grade ultramafics with the unique ability to be able to capture carbon, are going to be the new source of nickel for this next century. We need new large sources of supply. This is what is available. I know everyone likes high-grade deposits, but the last million-ton 1% deposit was Voisey's Bay back in the early 90s. In terms of value, we have a significant amount of value upside from now. And in terms of milestones going forward, we expect to have a strategic investor in place by the end of this quarter. We'll have permitting done this quarter, resource update in the second quarter, and feasibility study complete by the end of the year. So there's going to be a huge amount of value created during 2022. 2020 and 2021 were exciting years, and we think 2022 is going to be even more exciting.
Great. Thank you very much, Mark, for the great presentation. We do have a question or two. One kind of general question here. A lot of smaller explorers in your region are looking at much smaller but high-grade nickel projects and looking to sell the ore to someone else's mill. Have you considered building your own mill and partnering up with some of them?
Potentially. I mean, we're quite focused on the much larger scale operation at this point, but again, if the math worked at a point in time, that is something we might consider.
Great. And you had announced some encouraging metallurgy recently that improves recoveries, as you had mentioned. Can you comment on the nickel-bearing minerals, and are they desirable to a smelter? Yeah,
so there's the great thing with these deposits that are low grade. If you've got the right amount of nickel and sulfur, you get two minerals called hazelwoodite and aurorite, both of which have a 72% nickel content, as opposed to pentlandite, which is the traditional nickel mineral that's about 33% nickel plus or minus. Those traditional nickel sulfide deposits also have a pile of iron sulfides associated with them that you really can't separate in a mill. And so that's why most nickel concentrates end up being between 10 and 15%. In our case, we don't have any iron sulfides, and we've got these high tenor nickel minerals, and that's what allows us to produce a 46% nickel concentrate from a 0.19% head grade.
Great. And have you been in any discussions with steel companies about potentially building a steel mill in the region?
Yeah, so we pioneered back in 2013-14 when my past life at RNC Minerals, roasting these types of concentrates, which then allow them to be directly used by the stainless steel industry. So I've got from my Inco days, and then working with that new approach, which Tsingshan built two of the roasters based on our approach, which we had given them, and then we had discussions with two of the three large European stainless groups at that time. We've got very good relationships with those groups, and we will be looking to talk to these groups about building processing capacity within the Timmins area.
Great. All right, well, thank you again, Mark. Selby from Canada Nickel, and to everyone out there for joining us today. Up next, we have Global Atomic on Stream 1, and after a 20-minute break, Critical Elements Lithium on Stream 2. Thanks again, Mark.
Thank you. Take care.